okay? The videos would take less than an hour to watch, so you can get through all the training in just about an hour. It's very, very quick, very, very simple. Now, in addition to the recorded training, we're going to hold live training sessions each day for 4 days. Now, you can learn this trade in about an hour from the pre-recorded training, but we also want to be there with you live in case you have questions or need any help. So the first half of each live session is dedicated to training, and the second half is for Q&A. So if you can't make a live session, that's okay. Watch the pre-recorded training videos. And then the following Monday, we're going to place a live trade with you that you can follow along with us click by click. So take a look at, again, the schedule. It starts next week, the 23rd. We've got 4 training sessions at 11 a.m. Eastern Time, and then we're going to place our first trade on Monday, September 29th. Now, what I want to do is, this does involve an options trade. So I want to do a quick survey to kind of get a feel for your options trades. And I'm going to go ahead and launch this poll. There we go. And on the screen, you're going to see a survey. So click on the choice that closely matches your options experience. So 1, if you're brand new to options. 2, if you're a beginner, you got some experience with calls and puts. Intermediate, number 3, covered calls, credit spreads. And then 4, advanced experience with several multi-leg trades. Now, several years ago, my teammate Brian showed his 14-year-old daughter at the time how to do this trade. And she was able to follow click-by-click directions he gave her. And I'm confident if she can do it, so can you. It really is that easy. Okay? So I'm going to give another like 10, 15 seconds just to kind of get just make sure everybody is getting into that poll. Okay. I'm going to go ahead and close it in about 10, 9, 8, 6, 4, 2, 1. I skipped a few numbers there, but I didn't really skip them. I just still counted them anyway. All right, good deal. So it looks, and if I click the share button, I'm hoping this works. Okay, so it looks like kind of like a bell curve, actually. It's kind of neat how that works. Most of you are in the beginner to intermediate phase and in the advanced phase. So, like I said, I'm convinced that anybody really can do this trade, but I would say the majority of you are definitely in the position to where we can do this. Now, before we get into the details of the trade, I think it's important to discuss why you should take the challenge in the first place. In other words, what are the benefits of completing the challenge? If there aren't any benefits, why do something in the first place? So see if any of these benefits would help you. First, learning this income trade will provide you with income for life. Now, at some point, you're going to stop working, and it would be a huge benefit to have a way to continue to generate income for yourself. The trade you're going to learn in the income challenge has historically averaged about 2.5% per month. Now, keep in mind, this has been through up and down markets and through stable and very volatile markets. So it doesn't matter the market, the trade ultimately can be placed. Now, the second benefit is you can do this with as little as $5,000 in your trading account. So the barrier to entry here is very small. It's virtually non-existent. Now, on the flip side, this trade scales nicely. I trade it with $50,000 right now. So if you have a larger account, you can place this trade. I have clients that do with $100,000. I have clients who do with $500,000. So it scales up nicely as you get bigger and bigger. Now, benefit number 3 is that you can make some serious money very quickly. So, for example, if you did start with $5,000, did you realize that a 2% or 2.5% gain per month compounded over 15 years puts you at $400,000? I mean, even if you start this when you're 50, 55, you still get the benefit of that compounding return. Now, if you start with $25,000, you'd be near $500,000 after 10 years. You're looking at ultimately some very, very serious money. Now, the fourth benefit is the trade you'll learn has been very consistent. Now, historically, we've seen about 60% winning trades. Now, keep in mind, that's historic. You're going to go through periods of where you might have 50% winners, 45% winners. But when we look at all the data over a decade, we've seen about 60%. So many people struggle for consistency and lose more times than they win. And a lot of times it's because they're trying to hit the big winner. The income challenge teaches you a system where you're making solid gains to consistently, small wins, small losses with a higher degree of success equals big wins over time. And you're also going to have streaks where you exceed that 60% winning trades. One of our students, Larry, he said he learned the SPX system last year. We checked in on him after a few months and said, hey, how's it going? He said, trading has continued to go very well. Since the beginning, my stats are 22 wins and 2 losses, average of 4.8 contracts, 4.8 because he's scaled up a little bit, average gain 500 per trade, 6.5 days in average per trade, total gain of about 10,900. He started with a modest 30% account, $30,000 account, pardon me. So Larry started off the year with a 91% winning trades. It's pretty good. It's way more than I consider normal, but he already started to make some serious money. Now, the 5th and 6th benefits I kind of put together. First is that it takes minimal time to do the trade each week. I'm not exaggerating when I say you can spend a total of 15 minutes per week on this trade, and even less depending on your broker. Second, it takes minimal effort to do this. Now, like I said, my teammate Brian, you'll hear from him later in the Q&A, he taught his 14-year-old daughter at the time to do that. There are simple rules that require no guesswork. You don't need to be an expert trader to do this trade. Okay? Finally, benefit number 7 is that you can get started really right away. You'll be able to place your first trade in 1 week. So, very quickly in the chat, if you want to share with me, I'd appreciate it. Like I said, it's a live class where it's about 10 after 12 here in Ohio. Which one of these benefits or all of the benefits would be good for you? If so, how many of them? So share with me in the chat. All right, consistency, Elmer says. 5, 6, and 7, Glenn. I see all of them. Income for life, Kirby. Good to see some familiar names in here. I'm trying to get my chat window moved so I can actually see it. There we go. All except for number 3. Tom, I love that, by the way. David, number 4. Too many traders sometimes get wrapped up around the serious money. But yeah, I love it. Consistency. I see a lot of consistency. Great. Now, let's talk about the trade itself, because today we're going to spend a good amount of time teaching you how this trade works. We want you to feel totally comfortable with the trade before you decide to join us in the challenge. Now, before I do that, I want to do a quick introduction. My name is Ron Wheeler. I've been trading now for almost 30 years. I started in 1997. And for the last several years, I've been the head of the Ultimate Retirement Solution Group Coaching here at VectorVest. And several years ago, I put together a course called the Options Paycheck, which taught an option trade called credit spread. And the goal of that course was to teach investors a way to generate consistent income. And it's been very popular. I'm doing one right now. One of the coolest things, though, that we did with that is we took a technique taught in the paycheck class and we simplified it even more. That way, you could get the benefits of the income system and do it very, very quickly. And today, I'm going to teach you how that system works. Now, what I did is I took our options paycheck system and broke it down into a super simple system. And I want you to think of it like 5 ones, right? It uses 1 ticker symbol, it's 1 trade type, it's got 1 entry rule, 1 profit rule, and 1 stop criteria. Now, that's allowed us to take anyone, regardless of experience, and show them how to successfully place these income trades. So let me show you how this works. We call this the SPX paycheck, and I want to look at how this works with you. Now, before we do that, I just want to throw a special note on here. Let me say this. It's okay if you don't understand all of this right now. There might be some things you don't understand, and that's perfectly okay. Some of you who trade options may understand this, but if you don't, it's not a big deal. You don't need to understand it all in this particular session. So, the stock market has trends. When the market goes up, most stocks go up. When the market goes down, most stocks also go down with the market. And we believe, and our results, my results over trading for the last almost 30 years have shown that you should never fight the trend. Trading with the trend is the easiest way to make money. And we call that philosophy riding the wave. You just go with the flow of the market. Okay? History has shown that the market continues in the direction of the trend for some time, and then a new trend forms. So now that we know that, I want to look at probability, and it's kind of interesting. You know, I want to just show you guys. I mean, you guys probably can see this. I don't know if you can, but this is one of those things where I like doing real-time classes because it's always kind of neat. I want to show you guys this. It's going to be, it might be small. Let me see if I can blow it up. But what you're looking at right in front of you, that's a standard deviation curve, right? The bell curve. You're going to find that most data fits in a bell curve. And what I wanted to show you guys real quick, and I don't know if you guys can see this, this is the result of our poll today, right? I asked all of you to rate your experience with options. And take a look. Look at how this data formed. That's the bell curve. Most of you are in the beginner to intermediate range, with on the edges, brand new or advanced. I just thought that was kind of neat because that tells you right there that that's how data typically works, right? Well, that's how we're going to do probability in this type of trade. The idea is this. When the market is in an uptrend, we are more likely to stay in this up area, okay, than down here. So during a market uptrend, most stocks tend to go higher anyway. So you're going to be placing bullish trades. Now, how do you increase the probability of success? Well, the white dot, in our case, represents the price of the S&P 500. Probability says that the S&P has a 50% chance of going up and a 50% chance of going down from its current price. Now, if that's the case, the more room you give it to the downside, you're increasing the area the market is likely to be in the future. And you can see here, the stock is more likely to be in the green area because it's no longer in the 50-50 scenario. So let's put some numbers to this. If I choose a price, okay, a little bit below the current market price of the S&P, you've now set up an area of being in a 65% likelihood of staying in that area, and only a 35% likelihood of going down to this area. Now, you can lower the price in some cases even more, okay? Like over on the right, I've lowered that area tremendously, okay? Where now we have an 80% chance of staying in this area, but only a 20% chance of going below it. Now, as you start increasing the probability of staying in your area, you're also massively increasing your risk. So we've got to find kind of that sweet spot, if you will. Now, during a downtrend, it's the same thing. You're just kind of flipping it around. We're going to be bearish because the overall market might be at a bearish trend. So here's the price of the S&P. We want to make a trade where as long as the trade stays in the green area, that means it can go down like we think it will, it can go sideways, or it can even go up a little bit. And we're still going to stay in that green area. If we cross into the red area, this is where the market's not likely to go. If it does, we simply exit the trade. And again, you can set up the trade with the same probabilities before. Probability changes depending on how much room you give the market to move. Okay? Now, the SPX paycheck has two trades. One starts with about a 65% probability, and the other starts with 80%. Now, during the income challenge, you're going to learn the system with a 65% probability. Now, you might be thinking, why not the 80%? Then I have a greater chance of winning. Now, that is true, but that's a lot more involved in managing that trade. You got to kind of stay on top of that one. That's not one trade a week, one entry price, one, exit price. There's a lot more moving parts to that trade. And I have found over the last, 5 to 7 years that a lot of people don't want to spend the time managing their trades constantly, which is why I kind of put this one out there as a much more simple solution. And I will also tell you this, as somebody that's traded the S&P for way longer than the 10 years I've been doing the options paycheck, even I have transitioned from doing these higher probability trades over on the right to this trade over here on the left, because I'm the same way. The 65% trade is simple to set up, it's simple to manage, and it performs amazingly over time. So even I have gone to that one as well. Okay, now if the market's bearish, again, the idea is we're just going to flip this over and we're going to have the same overall results in an uptrend or in a downtrend. All right, let's talk about the trade setup. Now remember, as I said before, it's okay if you don't completely understand all of this stuff right now. You don't necessarily need to understand it, okay? So when the market is bullish, and I also want to talk to you about this, these slides that I'm using are actually part of the income challenge. So if you like this way of teaching, this is going to be how we teach you the income challenge and how we teach you to place these SPX trades. So when the SPX is bullish, we use a thing called puts. All right. So in this trade, we are going to sell a put, and then we're simultaneously going to buy a put at the same time. Now, when we buy the put, we call this insurance because it protects you. Number one, it limits the amount that you can lose, and it makes it a very, very low risk trade. It also protects you if you know options. It also protects you from volatility, if volatility were somehow to spike. It also provides kind of a hedge if the trade goes against you. Now, both of these trades are going to be on the same order, okay? This is called a spread. It's a bull put credit spread. Now, the newly created spread, it's going to have a price, and it's going to trade exactly like a stock does. So you're going to put this trade on, and just like if you bought 1,000 shares of Apple, it's going to go up, it can go down, the price is going to fluctuate every day. Our goal is to exit that trade at a profit, no different than something we would do if we bought or sold a stock. Okay? The bull put credit spread. The simultaneous selling of a put and buying of a put in one transaction. Now, when the market is bearish, we use calls. So in our trade, we are going to go above the current price of the S&P. We're going to sell a call and then go even further up, and we are going to buy a call at the same time. Now remember, the call that we buy, we refer to that as our insurance policy because it protects us if the market goes way, way, way beyond our trade. Which, by the way, in 10 years of me doing these trades and 15, 20 years really of doing the SPS as a whole, I've never had that happen. And a lot of people say, Ron, if it's never happened, why do you use insurance? Because again, it protects you from all kinds of things. It protects you from volatility. It creates a very inexpensive trade that you can do with $5,000. It's just a good idea to use the insurance. It cuts your risk if you're wrong, right? It's kind of like car insurance. Why do we buy car insurance? Do we plan on getting into an accident? No, of course not. But if we do, then guess what? We are protected. Now, both of those trades, again, they're going to be on the same order. The newly created spread will have a price and trade like a stock does. So this is called the bear call credit spread. And what I like about the names of these trades, by the way, is they're pretty self-explanatory. Bear calls. Well, you do it when the market's bearish, and you use calls. Well, what if I'm bullish? You use the bull put. Bullish because you're bull, puts because we use puts. So when we do these trades, this is the idea behind it. The stock or the market is going up. You're going to sell a put below the current price of the S&P. That's going to give us an area where we can make money if the S&P goes up, sideways, or it can even come down a little bit, and we can still be profitable. In a bearish trend, we're selling a call above the price of the S&P. We're buying our insurance a little bit higher. And now we've created a trade where if the market goes down, we win. If the market goes sideways, we still win. Even if the market comes back up a little bit more, we still have an area where we can make money. Okay? So those are the only 2 trades that we are going to be doing for this income challenge. Now, I want to explain in part 3 here how trades get opened and trades get closed, because it is a little bit different. And if you've never traded a spread, especially what we call a credit spread, it might take a little bit more to get your head wrapped around this. It's not that hard, but it's definitely a different way that you probably haven't expected. So in a winning trade, this is how it works. When we enter a trade, we are going to be paid from the broker. So that's why you got those green $2 signs there. We're actually going to get paid when we take the trade. When we close the trade, we are going to pay the broker back some of the money they paid us, but not all of it. That leads us to a profit. So let me explain and show you how this works. In a winning trade, let's say we collect $2,500. Because remember, when you do a credit spread, we're selling an option where we get paid for. Now we're going to buy insurance, but that insurance policy doesn't cost as much as the option we sold. So we're going to get paid $2,500 in this case. When we close the trade, we give the broker back $1,250 of it. But we keep the difference, and now the trade is closed. Okay? So it's a little bit different than when you buy something. When you buy something, you want to buy it for the low price and then exit it at the higher price. For a credit spread, we enter at a high price and we want to exit at a lower price. In fact, a losing trade is kind of the opposite of a winning trade for this. A losing trade means we get paid when we open the position, but when we close the position, we have to actually pay back more, okay, than the broker gave us when we started the trade. That's how losses occur. And remember, historically, this trade is, right around 60%. So you're going to have at least 40% of your trades go against you. That's just how the system works. So let me put some numbers behind this. When you open the trade, the broker pays you $2,500. Now, they don't just give you that money and all well that ends well, right? It's not like when I sell something on Facebook Marketplace, I sell it, I give it to the person, and now I keep the money. You're opening up an option position. That option position is going to trade every single day. It's going to trade in price. When you close the trade, this is where you are going to finally put the closing monetary transaction to it. Just like when you buy stocks, right? You buy a stock, you have to close it at some point, or you can keep the stock forever, I guess. Options are a little bit different in that end. We are going to get rid of the trade at some point. In a losing trade, we're going to collect in this trade, we're going to collect $2,500 to open the trade. However, the trade went against us. So we now have to pay the broker $3,750 to close it. Now, that's not as bad as it looks, because $2,500 of that is the money the broker gave you immediately when you sold the position. So that's going back to the broker, but you're going to be dipping your hands into your pocket for a $1,250 loss. So that's how you lose money in these trades. So when we say sell to open, where does that money come from? Where are these numbers at? So I kind of mentioned this briefly, but I want to kind of put some text to it. Let's say you're in a bullish trade. You're going to receive more money for the put that you sold than it costs for you to buy the insurance. So as I said, you're going to receive money when you place this trade. Okay? Now remember, those are placed in the same order. So that newly created spread's price is the net of the two individual legs of the spread. So, for instance, when I enter this trade, I sell a put and I'm paid $3,500 for selling that put. When I buy the insurance, I'm going to spend $1,000 on the insurance. That means the net of that transaction is a $2,500 payment for me. Now I've placed the spread trade on. Now it's going to trade every single day. It's going to go up and down in value, hopefully down. And at some point, hopefully we hit our profit target and then we can exit the trade. Now, If the S&P moves higher, which is what we hope it does, the price of those options are going to decrease. The option that you sold for $3,500 is now only worth $1,750. That's based on what the option's currently trading for. The option that we bought for $1,000 is now only trading at $500. So when we go and close this trade, we're going to close it for that price over here on the right. We sold the trade, we entered the trade, we got paid $2,500. When we close the trade, we pay the broker $1,250 of it. Again, we keep 50% of the trade. We collected $2,500 when we entered the trade, and we paid the broker $1,250 when we exit. We keep the $1,250. Okay? Now, in a bearish trade, it's the same idea. You're still going to receive more money for the call that you sold than it cost to buy you the insurance. So in other words, again, you receive money to place the trade. Because they're placed on the same order, right, the trade is going to pay you a credit. So let's say I sell the call for $5,000 and I buy my insurance leg for $2,000. Because these are both on the same order, that trade would have a net of $3,000. So when I place this trade and the trade gets filled, I'm going to see a $3,000 deposit into my trading account. But again, it's not like, oh, I just got $3,000 for nothing. You have a trade on. That trade, before you close, it's going to go up in price, down in price. It's going to change directions based on the move of the market. Now, if the market goes down, like in this case, a bearish trade, we hope it does, again, the price of your options are going to fall. The option that we originally sold for $5,000 is now only trading for $2,500. I can exit that and pocket $2,500. The option that we bought for $2,000 is now trading for $1,000. I'm going to lose $1,000 on that trade. So the net is I can close the trade for $1,500. Okay? I get to keep $2,500 from this transaction, but I got to pay $1,000 for that transaction, and I close the trade. So again, you collect $3,000 when you enter the trade, you get paid $1,500 you pay $1,500 when you exit. You keep the difference. And again, think of this like a stock, right? You know, you buy the stock, the money comes out of your account. If the stock goes up and you make $2,000 on your trade, when you exit the stock, the broker's whoever buys your stock is paying you for the stock, plus they're going to pay you at a premium so you make the money. It's kind of like the same idea here, except reversed. All right, we just looked at the first part of what you would learn during the income challenge. And as you can see, there's more steps for us to cover, such as, how you're going to control your risk, what do you trade, when do you trade it, how to set up the trade, how do you manage the trade. Now, of course, we're going to go over how to enter the trade as well. So let's talk about how to get started. We put together the Investing Income Challenge to help you place your first of many income trades, and here's how we're going to do it. As soon as you register, you're going to receive immediate access to a series of training videos which will walk you through the trade. Now remember, next week, we're also going to hold live training sessions each day for 4 days. Now these live sessions are going to take no more than an hour. And as we talked about earlier, the first half is dedicated to the training. I'm just going to walk you through the slides, and the second half is for Q&A. And then on September 29th, you're going to join me in the morning, and we're going to place our first live trade with you. And you can follow along with me in a click-by-click fashion. I happen to use Thinkorswim, by the way. So if you use Thinkorswim, you'll get to see me place the trade using that platform, in real time. Well, you'll see me place it real time anyway, but if you use that broker, you'll get to see it in the broker that you use, which I guess would be nice. Now, as an extra bonus, after you place your first trade, we're going to continue to work with you through the month of October. Each Monday, we're going to walk you through the setup live, and we're going to place that income trade with you every Monday. Now, if you can't join me live on Mondays, it's not a big deal. You can place this trade any day of the week you want, any time of the day. In fact, it doesn't really matter in the grand scheme of things. Now, we're also going to get together live at the end of the week to check in. That way we're going to answer your questions, we'll talk to you about the trade, and then make sure really you're still on track. Okay? If the trade wins, we'll talk about the win. If the trade loses, we'll go over the loss. We'll see how it goes. Now, here's the opportunity. If you're ready for the challenge, it's $295. It's one heck of a value for a trade that you can learn in a week, and it's a trade that you can realistically live off of, for the rest of your life to give yourself some decent income. Okay? If you want to do this, go to VectorVest.com/join challenge. We'll put that link in the chat box for you to click on. Together, we're going to do this with you. Now, as with all the course I do, I believe so much that you're going to love the income system. You're easily going to complete this challenge, and we offer a 100% money-back guarantee. So you can go through the entire challenge. If you're not satisfied, you can get your money back. The only thing that we ask you to do is actually go through the challenge. Watch the videos, be with me live, walk through a trade with me. But if you're not satisfied, we will give you a refund. We only want people to join the challenge if they're serious and excited to get started. Okay? We've worked with so many people over the years who came to us with a variety of experience in their past. Here's just a handful. Jim came to us, he was inconsistent and unsatisfied with the results. He said he had 21 winning trades in a row. Mike came to us and he said he had lost often, got to the point where he almost gave up. He learned the system, made 12 grand his first 4 months, all with indexes. Mark said he had no experience at all with the income trade, but after an hour with us, he was able to place his first income trade by himself in just 10 minutes. Okay? And even people that have never invested before. Brian showed his daughter how to place an income trade. She never invested in her life. She was able to take notes from her spiral-bound notebook, and she placed the trades by herself using Brian's account. Wonder if she was a registered professional. I'm just kidding, Brian. During the income challenge, we actually, in our Facebook community, we've actually had some people post. Gordon successfully completed the challenge. He said, hey, just want to thank Ron for teaching me a method to create monthly income. I'm new to options investing, and I wish I would have taken the option course sooner, but let fear of options stop me. I finished the June course and managed to make 3% on my trades for the month of July. We get posts like this all the time. Dan said he got a notification from Thinkorswim that his trade exits with profits. Thanks for another win following the teachings. Both Terry and Nina and Knighton, also closed their trades at profits. Nav posted he had started paper trading at a 75% winning trades with an average profit of $575. Now, a couple of important notes here. Okay, 60% is our baseline, but it can, depending on when you start, listen, you can have these nice streaks as well. All right, we teach you how to use market direction to increase that probability. Varney said he had 18 out of 20 successful trades, and when the market gets in a nice trend, that can happen. Gerald emails and said, place the SPX 35 Delta on 5/9/24, closed for profits the next day, and paid for the course. Made several before that, just wanted to share and say thank you. Hey? Notice I had posted earlier that my trade closed. Other people joined in the conversation. My trade closed too. All of these people we looked at today are not professionals. They're not financial advisors, ordinary people like you and me. Some had no experience at all. Now, this is not some sales pitch. This is reality. If you want an income, this is the trade to learn. It's as simple as that. Now, this is my performance in 2025. I want you to keep in mind that the S&P at one point in April was down about 15%. It currently sits at about 11% gain for the year. And our system this year is up about 15%. And I want you guys to understand that, listen, one of the things that you have to do with a system like this is you have to keep at it. Because if you look, there was the beginning part of the year that we actually were underwater for a while. And then we finally snapped out of it, and now we were up as high as 21%. We had a little bit of a losing streak here, but now we've kind of rebounded, and we're up back 15%. So, that's pretty good. As I said, this system historically averages about 2.5% per month. Now, understand, not every year has been, perfect. I've never had a losing year, but I have had some years where the winnings have been in the single digit of percentage. I've had years where it's been 40%. So over the course of time, though, it has averaged about 2.5% per month. Okay? So it is a good system as long as you follow it and stay with it. It's really hard to make money if you try a trade, it doesn't work for 3 or 4 weeks, you give up on it, and that's it. You know, you got to think of it this way, right? If I had given up on the trade during this little downturn, I wouldn't be back in it for the upturns. If you gave up on it right here, you're not going to be up 15% for the year. So that's how real trading strategies work. So are you up to the challenge? Let me know in the chat. If you're up for the challenge, just give me a big yes in the chat box. All right, I love it. I see quite a few of you guys. Yes, yes, yes. It's a good challenge. And like I said, the value is there. Okay? All right. Think about this. Our main goal here is to make consistent, meaningful income. Is it achievable? Well, the answer is definitely yes. You've seen how to do that in our real trading, what I've shown you so far, even my results this year. What is the likelihood that you'll achieve your goal? And the answer to that's pretty high. We've seen many people succeed who have no experience. What about the effort? Well, that's really low because there's not a lot of work involved to learn and place this one trade. Well, what about the sacrifice? That too is low. At first, you're dedicating about an hour a day for a week. After that, you're doing it to gain an income system that you're going to use the rest of your life. What's the risk? The risk is low. First, the investment is only $295. It's a very, very good deal. Plus, you have a money-back guarantee. Additionally, the trade you set up is a way that losing trades have minimal risk. The time commitment here, that's low. There's going to be some time dedicated to learn the trade and maybe even take the trade in your early start. But after that, you're talking as little as 5 minutes a week. I say 15 just to be, to keep it more conservative. But listen, you can place these trades in as little as 5 minutes a week once you get the hang of it. So at this point, you got your choice. Okay? You can choose to do absolutely nothing, stay where you are right now. Or number two, you can learn to generate income. Of course, listen, you can try to do it alone. If you're willing to spend hours in front of your computer, do a bunch of back testing like I have, real trades where you kind of find out how it works, winning and losing, you might be able to pull it off. Or just let us guide you through it. We're going to walk you through each part of the system. Okay? So, this is important. I want you to mark on your calendars that first day, September 29th. Are you going to watch that day come and go like so many people? Or are you going to be among those who remember that day as the day they placed their first income trade? So again, ask yourself what it'll cost not to do it. Earlier we looked at the serious money you can make. Would you exchange $295 one time right now to get that number? So if the answer is yes, go to VectorVest.com/join challenge. Get registered today. Now this $295 special is only available until Thursday at 6 p.m. After that, the price goes back up to $495, which is still a great deal. Registration for the challenge is only open until on Monday, so get signed up before that, but the special price is Thursday at 6. And by the way, if you're an alumni of the Options Paycheck course, you can actually register for this for $95. We sent you a private link via email, or let us know in the chat. And again, if you know that this is right for you, you're joining me in the challenge, just type 2 words in the chat, I'm in, because we'd love to welcome you to the class by name. All right, so here's what I'm going to do. I'm going to bring in my colleague, Brian, and if you have any questions kind of following up with me, I can answer for you. That'd be great.
Awesome. Hey, Ron, can you hear me all right?
Yep, loud and clear.
All right, excellent session. We've already got a bunch of people interested in the chat. So I figured they've asked some great questions in the chat. So I figured what I would do, Ron, is have everybody else hear their questions and have you answer them.
Sure.
Because I think answering those questions would be beneficial for everybody. Would that be all right?
Yeah, sounds good.
All right. But first, everybody, Ron mentioned this a moment ago. Two housekeeping items I'll mention. One is the registration closes in just a few days, right? So this is a quick turnaround because Ron starts his training next week. So registration closes, what is it? I think it's Monday. is it? I'll have to double check, but it's like Monday or Tuesday. Your training is on Tuesday, so that registration closes early next week. But this $295 price goes away, like Ron said, on Thursday of this week. So take advantage of it while you can. This is actually lower than our elite pricing. So there was somebody who was asking, is there an elite discount? So this $295 is lower than that. So take advantage of that. And the only thing that is lower than the $295 would be if you've taken our options paycheck course, and then you want to go through this challenge with Ron. Okay. All right. So Ron, a few of the questions that came in, this one from somebody, I asked 2 questions. They're like, oh, you mentioned the options paycheck.
Mm-hmm.
How is this different than the options paycheck course? And Ron, I'll read you what I wrote, and I'd love to get your little added flavor, if that's all right. I wrote back to the gentleman in the chat. I said, you could think of this challenge as like options paycheck light, like Bud Light or whatever, but it's options paycheck light, where this course is the options paycheck course actually teaches how to implement the system that you just showed here today on like all stocks, right? How to use find out which stocks to place this trade on. You're looking at the entire universe of stocks and placing this trade on a whole bunch of different things throughout the week. And you could be placing 5 trades a week. You're basically opening up your income stream to multiple streams, whereas this challenge that you're doing is very focused. It's like, all right, I think you said it at the beginning, how to simplify things just down to one thing. You're just looking at the S&P. But I'm going to pass it to you, Ron. I totally butchered that, but I'm going to ask if you could kind of clean that up. And what was your take on the difference between this and the full paycheck course?
Yeah, and I think you hit it on the head. I mean, I always look at this as kind of the gateway to the options paycheck. It's a simple trade that teaches you the fundamentals of what we do in the options paycheck, except you don't have to worry about finding stocks. You do it on one market. It gives you the base concept of understanding about trading with probability, and it kind of gets you jump started off into the trades. And the reason why we did the income challenge ultimately is we have found that we do this in the options paycheck. We kind of teach this softly in the options paycheck as one of the trades too. And we actually found that a lot of our clients over the years have said, Ron, I just started with the SPX and then kind of worked my way into stocks from what you taught me in the paycheck. And, I found that it worked great for me. So we're like, okay, well, why don't we just teach people the SPX trade to see if they're kind of interested in the whole idea of a credit spread. It's a simple trade they can learn, gets them ready to go for the whole grand concept of, income trading with stocks every week. And it's just been very, very successful. It's a good ground floor trade to get you really kind of in the right mindset of income trading. Hopefully I didn't butcher that one too much either.
We can have a contest.
Yeah.
All right. A few other ones that I've answered in the chat. Actually, I answered and our team in the background answered. This one is from Scott. Scott says, well, how do you determine when the market, when to switch from bullish to bearish? And I just said we use a timing signal in our software. And Ron, it's pretty binary, right? You're either bullish or you're bearish, right?
It is. It's, you look at a graph, you're either bullish or bearish. It's pretty much it. Of course, we'll teach you the timing system that we use, of course, in the course. But it is. There's no interpretation. It either is or it isn't. It's yes or no. True or false, up or down. That's really all it is. And that's how I like to trade, by the way. That's what you're going to notice that in this system. There's really not any nuances. It's here's what you do, binary, 0, 1. That's it. So I learned to trade. Well, my problem with when I learned to trade is I had instructors and I had teachers that I worked with that weren't very binary. They were like, well, if the market kind of does this, and if you see this, and you kind of see that. I didn't like that at all. I actually come from the tech background. I have a degree in computer science, and I like binary thinking. It's either on or it's off. It's either a 0 or a 1. So I developed my trading mentality off of what I was taught, but I put everything into very easy rules. So it is. That's what makes this thing easy, is it's like you look at something, here's what I do. There's no, interpretation. There's no second guessing. Just follow the rules all the way down the line. And it's easy to do.
All right, cool. This next one is from David. David was wondering about the market. He called it chop, but once again, I'll read you what I wrote to him, and then you could clean it up. So David had said, doesn't the market chop in a range 75% of the time? So I had written back to David, I said, well, the market can move sideways sometimes, but we find that it typically trends either up or down. However, the great thing about this trade that Ron showed is that it can be profitable even if the market moves sideways. But what's your take on that, Ron?
Absolutely right, definitely. So even when the market is in a sideways range, the whole idea of this is we want to make sure we put the trade out far enough to where even if the market does go sideways, we still have the opportunity to make money. Even if there's a little bit of volatility, we actually have the system to where we check for volatility, and that helps us determine how we should place the trade. So yeah, I mean, I would agree with you 100% that volatility and things can be in play, but we can work around that too.
All right. This one is from Bybin. Says, what's the minimum investment that I need to do this trade?
You need $5,000 in your account. $5,000 in your account is, enough to place one trade or one contract, and that'll get you started. And again, if you see success with it, you start amping it up. I wouldn't go from like one contract to 20 or anything like that, but as you start making money, you can start increasing your bets, if you will.
All right, this one is from Anant. It says, I cannot attend the live sessions. Will it affect my benefit from the course or from the challenge?
I don't believe so, because this trade in and of itself is so simple to do. I really don't think not being able to see it live is going to be that big of a deal for you. Personally, I don't. I really don't think it's that big of a deal.
All right, so a quick reminder, go to VectorVest.com/join challenge, and that'll get you registered and ready to go. And remember, Ron mentioned this, you get immediate access to all of the training. So even though Ron's official training he'll do next week, you could get access to it now. So if you wanted to and you're a real go-getter, you could learn the trade now and place your first trade on Monday. Like you could be completely comfortable and ready to go and place your trade next week. But you get immediate access to all the materials right away. Just go to VectorVest.com/join challenge. It's $295, and we'll get you set up and ready to go. And Ron's going to basically hold your hand for an entire month and make sure you are 100% comfortable placing this trade. But if we missed your question, let us know in the chat, and then we will get to it. I see a question I'm going to answer to Ravi in the chat, and we'll give everybody let me check the YouTube stream to see if we have any questions that came through on YouTube. Let's see. Jake says, can I have the link for the elite price? This price that we're showing here, the VectorVest.com/join challenge, the $295 is lower than the elite price. So you can use that link, Jake. And Guy, this, if you are currently a subscriber to VectorVest, great, you'll get, that's fantastic. Those of you who are not a subscriber to VectorVest right now, you get a trial access to the software during the bit of the challenge here. So just go to VectorVest.com/join challenge and I'll get you all set up. This question from YouTube, Ron, is asking about deltas. It says, do you need to know the deltas and all that other options talk?
No, you do not. I mean, there's really, the way I've got the trade set up, you don't need to know any of that stuff. All of my setup rules that I give you are based on all that stuff, by the way. But as long as you're just willing to follow, here's the option you sell, here's the option you buy, here's the expiration you use, you don't really need to know any of that stuff. I know it. I put the trade together based on everything how the options work and how they all decay and all that kind of stuff. But no, you don't need to know the underlying of it to do this.
All right, 2 more questions came in. Joe is really curious. He'd love to see those year-to-date results again, that graph.
Yeah,
so we have it on a graph for you, Joe.
Let's see here. Bear with me a second.
One of the things I love about Ron is he's very transparent. You will see the trades that he does. You'll see if he has winners if he has losers. He'll talk you through it. He's not going to be like, oh, I'm not going to show you my losing trade this week. Whatever it is, Ron is very transparent. He knows we've been doing this for 10 years, and we know the system works. And like Ron said, you just got to stick with it. But Ron, I'm going to pass it over to you. Joe, this is the results.
Yep, this is the results, and we're up, like I said, right around 15% for the year. And then, as Brian said about transparency, all of my coaching students, they have access to all the trades that I do. This is a spreadsheet that I keep of all the trades that I do, whether I do a stock trade or this is the SPX trades I've done this year. So I've done 37 trades this year so far. And again, up 14.7% for the year. And then, I also, like people asked about the paycheck. I also do paycheck trades. These are all the stock trades I've done this year. So the cool thing is I am very transparent. You can see that I've got winners, I've got losers, I got red in there, I got green in there. In this, I'm up about 13.5% for my stock trades this year too. So a lot of people ask, why do you just not trade the S&P? Why do you trade stocks too? Well, you can make money in both, which is great. You can kind of like double dip, which is kind of nice. So, yep, very transparent. I keep all of my records pretty much open so people can see them. Because, listen, if I'm not making money, I want people to understand that, hey, I'm seeing it too. Or, if I'm doing profitable and you're not profitable, I want people to, to kind of work with me and say, hey, what's going on? And we can try to figure it out.
All right. Last question came in from Bybin. Now, you talked about this a little bit earlier, Ron. This one is asking about the days of trading. It says, which days are you trading?
I trade Mondays. Because that works with my schedule with my coaching students. I used to trade the S&P on Wednesdays and Thursdays and Fridays. Over the last 20 years, I've traded the S&P pretty much every day you could think of. So I traded on Monday mornings only because that's when I have my SPX coaching with my students. But it doesn't really ultimately matter when you place the trade. You can place it on Tuesday afternoon or Wednesday morning, whatever your schedule works with, during the week. So you can place it anytime you want. I just do it on Monday mornings because that's the coaching times that I have with my students.
All right. So with that, just a quick reminder, there's the link, VectorVest.com/join-challenge. The $295 is good until Thursday, after, depending on your time zone, Thursday dinner time, 5 o'clock, 5 or 6 o'clock, something like that. And then the registration closes next week. Ron's first live session with you all is Tuesday of next week, but you could start going through all the training materials immediately as soon as you sign up. We are excited to do this because we know it works. We know that anybody could do it. You put in some time, you could do it. You have a small account, you could do it. You're 14 years old, like my daughter was. She took out her spiral-bound notebook that she had in school and wrote down the rules, and then she was able to do it. So like Ron said, if she could do it, you could do it. Just be patient with yourself. And even if you have a losing trade, just stick with it. The system works, and we're going to show you how to do it. Ron's an awesome teacher. He will make sure that you are 100% confident with this trade, and we are excited to do this over the next month. So go to VectorVest.com/join-challenge. And Ron, I'm going to pass it over to you to wrap up for today.
All right. Well, thank you, Brian, and thank you to everybody else in the background. Todd was back there, I know, with Stephen, I think, too. So thank you guys for helping me out and answering all the questions that you guys had. And thank you guys for spending this hour with me. I definitely appreciate it, and I hope you got some good value out of what we do. And most importantly, hope you join us for the challenge. Like I said, it's a really good trade to get yourself started with options. Very simple, very, easy to do for everybody. And it's something that, I've been doing for a long time. So I definitely stand behind, what the options, what the income challenge does for you. So with that, I will bid you a farewell, and hopefully we'll see you all next week as you start the challenge for yourself. Thanks again, everybody, and hopefully see you then. Take care.